Imagine you wake up tomorrow, check your bank app, and boom, your balance says zero. Not because you spent it, but because everyone suddenly decided dollars aren't worth anything anymore. Terrifying, right? Well, here's the crazy part. That's not science fiction. That's literally how money works. And nobody ever explains this to you because the people who benefit most from your confusion, they're the ones writing the rules. Think about it. We spend our entire lives chasing money, working for it, saving it, stressing about it. But ask the average person what money actually is, and they'll mumble something like, medium of exchange, store of value. That's the textbook answer. But the real answer? Way simpler and way scarier. Money is just trust. That's it. A collective agreement that these numbers on a screen or pieces of paper mean something. If tomorrow we all stopped believing, it would vanish faster than your paycheck on rent day. And here's the kicker. Centuries ago, a small group figured out that if they could control that trust, they could control everything. When you get a paycheck, you don't actually get wealth. You get a claim on wealth, a promise. And promises only work if people believe in them. That's the first illusion. Now let's talk about banks. You think they just hold your money safely, right? Wrong. Banks are like magicians, except instead of pulling rabbits out of hats, they pull money out of thin air. It's called fractional reserve banking. Basically, they keep a fraction of deposits and loan out the rest. But here's the mind bender. They don't just loan out what exists. They literally create new money digitally when they approve loans. So every dollar beyond physical cash, it's debt. Your salary, your savings account, your mortgage, all of it exists because someone somewhere owes money to a bank. If they default, poof, that money disappears. Wild, right? Here's where it gets darker. The system doesn't just allow debt, it requires debt. Because every loan comes with interest. If a bank creates $1 million in loans at 5% interest, the economy now needs $1,050,000 to pay it back. But only $1 million was created. Where does the extra $50,000 come from? More loans, more debt, more growth. It's like playing Monopoly where the banker keeps inventing new rules mid-game. And the rules are designed so you can never win. The system needs perpetual growth, otherwise it collapses. That's not a bug, that's the feature. And here's the genius part. They made debt feel normal. Actually, they made it feel good. Want a house? Take a loan. Want a car? Loan. Want a phone that costs more than your rent? Loan. Debt is basically time travel for consumption. You get to feel rich today and pay for it for the next 30 years. But while you're paying, you're trapped. You can't quit the job you hate. You can't take risks. You can't start that business idea. You're not chained, you're comfortable. And comfort is the best prison ever invented. Meanwhile, banks rake in overdraft fees, credit card interest, and confusing financial products designed to keep you paying forever. Complicated on purpose. Because when you don't understand the system, you blame yourself instead of the system. And when you blame yourself, you don't get angry. Brilliant, right? Now let's peek at the other side. The people who actually understand money, they don't borrow to consume, they borrow to invest. You buy a car, your debt goes up, but your assets stay the same. They buy a property, their debt goes up, but their assets go up faster. And here's the magic trick. The interest they pay is often tax deductible, so while you're paying interest with after-tax dollars, they're using debt as a tax advantage to grow wealth. Same tool, different outcome. And then compound interest kicks in, not on debt, but on assets. $10,000 invested at 10% annually becomes over $450,000 in 40 years. But here's the catch. You need money first to invest. And the system ensures most people are too busy servicing debt to ever get there. That's why generational wealth is such a cheat code. The wealthy start the race miles ahead, while the average person is still tying their shoes. Look around today. The average American household carries over $150,000 in debt. The US national debt, over $37 trillion. And yet, people still think it's their fault they're broke. They think they're bad with money, but they're not bad with money. They're just playing a game where the rules were written by people who win when you lose. Here's the good news. Once you understand the rules, you can start playing differently. You don't have to signal wealth you don't have. You don't have to consume what you can't afford. You can't opt out of the system entirely, but you can opt out of playing it the way it wants you to. You probably won't become a billionaire, but you can build a life where money serves you instead of the other way around. And that's not nothing. That's everything. So now you know how money really works. It's not mystical. It's not complicated. It's just a game of trust, debt, and rules you were never taught. The question is, what are you going to do with that knowledge? If you found this eye-opening, smash that subscribe button, because every week we break down the systems that shape your life, the stuff nobody else explains. This is Casual Cash Flow, reminding you, in the game of money, the first step to winning is finally learning the rules.